A sole trader in Denmark is subject to individual income tax on the profits generated by the business. The taxation process for a sole trader is relatively straightforward, and I will try to outline how it typically works. So, before you start your sole trader, you should register it with the Danish tax authorities. You will receive a central business register number, which is CVR. It is used for various official purposes, and it's necessary. As a sole trader, you are required to maintain proper accounting records, including income and expenses related to your business. Accurate bookkeeping is essential for calculating your taxable income. At the end of the fiscal year, you must calculate your business income, which includes all revenue generated and deductible business expenses. The result is your taxable business profit. So you have the revenue, you have the costs and the profit, and you pay the tax from the profit. Also, in case of a sole trader, your taxable business profit is considered your personal income. It is combined with other sources of income that you might have, such as salary, interest, or dividends. This total income is subject to personal income tax. And Denmark has a progressive tax system with different tax rates depending on your total income. The more you earn, simply speaking, the higher the tax rate you will pay. As of today, the tax rate, they start with 8%, this is the bottom line, and the upper line is about 56%. This is how much the top earners in Denmark pay. You can deduct legitimate business expenses such as rent, utilities, office supplies, travel expenses, and depreciation of business assets from your taxable income. Those deductions can help you reduce the tax liability. And here the basic rule of the Danish Accounting Act is very simple. The cost of your company is anything that is contributing to the income, the revenue that you're generating in the company. And if you don't know if something can or cannot be your cost, you can always ask your accountant for guidance. As a sole trader, you are required to make estimated prepayments, so-called advanced tax, provisional tax, during the year. And this is based on your expected annual income. So those prepayments are typically made 4 times a year. But the exact amount is determined by the tax authorities. You can also adjust it if your circumstances change. So basically you submit the document that you say, I will earn this and this amount of money, and on the basis of that the tax office will calculate the advanced tax payment for you. If you pay too much, you will just have it returned. If you have too little, you will need to pay more. But let's go back to the main topic. By March 1 of the following year, you must file your annual tax return with the Danish tax authorities. The tax return includes information about your total income, the deductions, and any other prepayments that you have made. The tax authorities will review your tax return and issue a final tax assessment. So this final tax assessment will determine the actual tax liability for the year. And here is the rule is simple. If you owe additional taxes after the final assessment, you will need to make the payment by the specific due date. If you have overpaid, you will receive a refund. And it's important to note that tax rules and deadlines that I'm talking about, they might change, and there might be some updates in the specific year. So to make sure you're following the deadlines, check the Danish Business Authority website or consult with the accountant. And if you have any questions regarding running a company in Denmark, please feel free to get in touch with us. We wish you best of luck with your business in Denmark.